and then people can obviously join in as they come. So welcome, good afternoon, everybody. Thank you very much for joining us to today's webinar from the Acclaro team titled Mastering CDP Disclosure, Providing Key Insights, Trends and Future Expectations. So we've got a strong agenda for you today. We're going to go through some introductions into Acclaro Advisory and CDP as well. Then we're going to start delving into CDP in 2024, looking at last year's questionnaire, the key trends and challenges from the reporting landscape. After that, we'll be looking towards the future of reporting, especially from the CDP questionnaire, but also how that interacts with other sustainability reporting, and then also what it means to organizations such as yourselves. We'll also be providing tips for success, and then how we can support, and also a Q&A as well. So I would encourage you to use the Q&A button and provide any questions, and then I'll be taking the team through those to try and bring some answers to you. We may not get through all of them, but please do pop them in, and we'll get back any that we don't answer. We'll answer at the we'll respond through email. So introductions. We have speaking today Kristen, who is a senior consultant at Acclaro Advisory. Kristen has some great experience within the sustainability space. She's worked at CDP for a start, and has also immersed herself in the ins and outs of the TCFD reporting as well. So she's got a great wealth of knowledge to provide you, and she's leading our CDP services for our clients. And also we have Katie Hanbury as well. So Katie was instrumental last year in helping some of our key CDP-based clients achieve their A- scores, which we're very proud of. So Katie has really immersed herself in the CDP questionnaire and has built up a huge amount of knowledge in a short space of time. Then you've got myself, Chris Havers. I'm a director within the Acclaro Advisory team. I've been here for 6 years. Got about 15 years of experience within sustainability reporting. I also worked at CDP for 5 years, and I've pretty much been through the CDP reporting process each year since then. So I think between the three of us, you've got a lot of experience to pull information from. So a little bit about Acclaro Advisory. We were founded in 2012. We're a sustainability consultancy, and we provide support services that we support and drive our clients in their sustainability challenges. We deliver a range of services such as materiality assessments, helping clients develop their sustainability strategies, provide climate strategy and climate management roadmaps, carbon accounting, SBTi targets, and also help businesses with their corporate sustainability reporting. Incidentally, if you haven't seen it, please do check out our website. We have a dedicated ESG reporting webpage, which has some ESG reporting guidance, as well as a link into our CDP devoted page as well. And you can also use that to track monthly regulatory and framework updates as well. So please do check that out. It's quite a cool new domain on the website. We're very proud as well this year because we've been accredited as a CDP Silver Partner. So we have a good history of providing support to clients within their CDP reporting, and we've worked with a range of customers from finance backgrounds to manufacturing backgrounds to professional services backgrounds as well. So we have a great wealth of experience, and we're very excited to be coming in this year with not only that experience, but also a little bit further internal insight into the CDP process by being an accredited partner of CDP. So who are CDP? For those of you who may not know, many of you probably will know, CDP is a world-leading disclosure platform. They have been around for 25 years, and this disclosure platform supports companies, cities, and states and regions to help them understand, report, and manage their environmental backgrounds on climate change, water security, deforestation, biodiversity, and plastics. Traditionally, it was all focused around climate change, um, and the primary aim has been to deliver consistent data from organizations to the investment community, so that the investment community can use this information to understand what their um, what their investment portfolio, what risks and opportunities are in their investment portfolios for the long term. And if you imagine when CDP started many years ago, there were 3 or 4 people working in a leaky basement um, in the centre of London, and they were knocking on investment managers' doors and asking them a key question to say, do you know what risk climate change has to your future long-term investment portfolios? And that's where it all began. And now all of a sudden we're in this position where it's a fundamental disclosure platform for organizations around the world. So we've got a few statistics as well that we can take you through. As I mentioned, 25 years ago was when CDP was founded. So they'll be celebrating their 25th anniversary this year. And to show that they've come a long way, we can see that over 22,000 corporations report to CDP on an annual basis. This is through not only the investor-related program, but also through the customer to supply chain program. So it's not only information being transferred between corporation and the investment community, but also major purchasing customers such as L'Oreal, for example, are asking their supply chain to answer these questions and provide that data up to them, so then they can use it for their to improve their sustainability strategy. So there are a number of benefits to reporting to CDP. As you can see on the screen, we have investor appeal, regulatory compliance, risk management. The ones which really stand out from my point of view is demonstrating transparency is a real core one, because CDP has been heralded as the primary disclosure platform for organizations, and achieving that prestigious A grade is a real kind of badge on the arm of organizations. I think it's really hard to game the CDP process these days, because you do have to provide a lot of quality and a lot of data and a lot of information. And because the questionnaire gets very technical, it's really hard to really kind of, I say, fake the information that's being provided. So the score that's provided is a true reflection of a company's performance. And so for companies, when they are achieving those A grades, it does show that they are doing a lot of really good stuff. And so, yeah, demonstrating transparency, portraying the company's performance is a real benefit. And then also, it's a great way to stay ahead of regulation, because regulations are always set as I guess a minimum standard in a way. So the CDP questionnaire tries to push companies beyond that minimum standard. And so if you're looking at where regulation is going to be in the future, going through the CDP process is a great way to stay ahead of that process and represent your business as a leader, and providing best practice. So what I'm going to do now is I'm going to hand over to Kristen, and she's going to take you through the key trends and challenges.
Great. Thanks, Chris. That was really helpful introduction and background. So hi, everyone. I'm Kristen. And today I wanted to talk you through some of the key trends we've seen in CDP in recent years, and also some of the main challenges that businesses face when reporting to the questionnaire. So as you may know, we saw significant changes to the 2024 CDP questionnaire with the integration of climate change, forest and water modules into a single questionnaire. And this makes it easier for companies to provide a more holistic view of their environmental impact. In addition, biodiversity and plastics were introduced as new focus areas. With growing awareness around nature-related risks, companies are now expected to disclose how they manage biodiversity impacts and plastic use in their operations and also in their supply chains. And this is a reflection of the increased urgency to address these issues. There's also a greater emphasis on social and governance metrics, which is a part of the sort of larger shift towards recognizing the importance of ESG as a whole, not just environmental factors. This aligns CDP more closely with global frameworks like the International Sustainability Standards Board, ISSB, the Corporate Social Responsibility Sustainability Reporting Directive, CSRD, in the EU, and also the Task Force on Nature-Related Financial Disclosures, TNFD. So those of you who might not be familiar, the ISSB is a global body set up by the IFRS Foundation, and it introduced new regulations in 2023, IFRS 1 and 2, that help companies better address ESG issues in their disclosures. The CSRD, as some of you may be painfully aware, is an EU directive that requires large companies to provide more detailed sustainability information. And the TNFD is a global initiative focused on helping businesses report and manage nature-related risks and opportunities. And by aligning with these standards, CDP is helping to simplify the complexity of sustainability reporting while also positioning your organization in line with evolving disclosure requirements and investor expectations, because we know it can be quite a convoluted regulatory environment out there. So CDP is trying to shift more towards alignment with other disclosure frameworks as well. Overall, these updates reflect a sort of growing trend towards a more integrated and standardized sustainability reporting that provides a clearer and more comprehensive picture of corporate impact. And you'll all be pleased to hear that CDP has confirmed minimal changes for the 2025 questionnaire. So this is a really good opportunity for companies to build on their responses and scores from the 2024 disclosure cycle. So now I wanted to go through some of the common gaps and challenges that companies encounter when disclosing to CDP, and particularly in last year's CDP disclosure. So CDP now requires companies to have credible, publicly available transition plan aligned with 1.5-degree pathways, with a clear oversight and accountability mechanisms in place. However, only about 1 in 4 companies disclosed a comprehensive transition plan last year. Which is a pretty significant gap, especially as companies are facing increasing pressure to meet the standards set by initiatives like the Science Based Targets Initiative, SBTI. And SBTI requires that companies set both near and long-term targets that are validated by science and ensure that they align with global climate goals. And transition plans are also a key requirement of CSRD and the ISSB's IFRS 2. So unfortunately, many organizations still lack these clear commitments, or their targets fail to address Scope 3 emissions. Since Scope 3 emissions can impact scoring, not addressing them can be detrimental to a company's overall disclosure performance. In the UK, IFRS mandatory disclosures are expected to come into force sometime this year. In addition, the Labour government has publicly stated the importance of transition planning and hopes to mandate it over the coming years. So to prepare for these incoming regulations and to better manage environmental risks and opportunities, it's really important for companies to have a robust transition plan in place. Companies that fail to do this risk being left behind as regulatory frameworks tighten and stakeholder expectations continue to rise. Next, we have supply chain engagement and Scope 3 reporting. These areas were also a big challenge for companies. Scope 3 emissions, which are those emissions that arise from supply chain and end user activities, often account for a significant portion of overall emissions, often between 70 and 90% of a company's total carbon footprint. So effective management and reporting of these emissions has become a really critical component of CDP disclosures. In recognition of this, CDP is placing much greater emphasis on supplier engagement. So companies are now required not only to disclose their own emissions, but also to demonstrate how they work with suppliers to drive emissions reductions, integrate sustainability into procurement practices, and improve data quality across the value chain. However, we know that this is a struggle for many companies. Some of the key difficulties that companies face is poor data quality or a lack of availability for data. Many suppliers, particularly those further down the supply chain or in regions with less stringent regulations, may not have the resources, the processes, or even the technical capability to accurately measure and report their emissions, which means that as a result, many companies will struggle to obtain reliable data, which makes it difficult to compile an accurate Scope 3 emissions inventory. And this lack of transparency can really hinder a company's ability to understand its full environmental impact and accurately report to CDP. CDP continues to emphasize the importance of Scope 3 emissions in its disclosure framework, and companies will really need to meet this challenge. This means developing more robust processes for data collection, working closely with suppliers to increase engagement and build capacity, and integrating sustainability deeper into procurement and supply chain management practices. The next topic is biodiversity and TNFD alignment. These were also other areas of sort of quite critical gaps. So despite growing investor and regulatory focus on nature, biodiversity remains a widely underreported area, and fewer than 10% of companies assess their dependencies on nature. CDP now expects organizations to disclose their nature-related risks, impacts, and governance structures to align with global frameworks like TNFD and CSRD. Another key challenge was climate scenario analysis. So many organizations lack robust climate scenario analysis, despite its growing importance in assessing long-term risks and opportunities. CDP is now requesting more details on how a scenario analysis informs business strategy and investment decisions. This topic is complicated, we know, and it's often not a straightforward process to businesses that are new to sustainability reporting. But CDP has released guidance on how businesses can use scenario analysis to inform their business, and it's often useful to engage with companies like Acclaro to get help with these more complex topics. Finally, while CDP doesn't explicitly require a full double materiality assessment, its questions are increasingly aligning with CSRD's approach. So double materiality assessment helps organizations understand which topics are material to their business, and it informs their approach to CDP's Module 2 on dependencies, impacts, risks, and opportunities. So companies that proactively consider both financial and impact materiality will be better prepared for evolving regulations.
Thanks, Kristen. That was really insightful. And just a reminder, if you guys have any questions, please feel free to put them in the Q&A chat box. So we're now going to look at the future trends of CDP. Before I dive into this, I just want to note that the changes I'm about to discuss are not definite or confirmed by CDP. Rather, the purpose of the next slide is to reflect the potential updates based on Acclaro's research and CDP's strategic direction. As you all know, each year CDP raises the ambition of its disclosure framework with its aim to promote greater accountability and transparency in environmental reporting. And although 2025 is a year of more stability for reporting, companies should aim to stay ahead of the curve and prepare for more stringent reporting requirements and take proactive steps to enhance their sustainability performance. So firstly, we believe CDP will continue to focus on holistic reporting. CDP strongly emphasizes that to address the climate crisis, we need to address other aspects of our interconnected ecosystem, such as nature. And as we saw in 2024, biodiversity and plastics were introduced as new areas of focus. Therefore, it's possible that in coming years, the number of questions that address these issues could increase. And although CDP has confirmed plastics and biodiversities will remain unscored this year, they will likely be scored in subsequent years. So to prepare for this, we recommend companies have a holistic understanding of their environmental risks and opportunities, moving beyond focusing just on climate change. Having a holistic understanding of these issues enables you to develop a more robust and comprehensive climate and nature strategies, as well as better prepare your company for growing regulation and emerging challenges. Next, we believe there'll be greater alignment between CDP and the ISSB and CSRD. In 2024, CDP partially aligned with frameworks and standards such as the proposed US SAC rule, the ESRS, and the TNFD. CDP is likely to seek full alignment with these standards for the 2025 questionnaire. And we've already seen evidence of this since the 2024 disclosure. Back in November, CDP and EFRAG confirmed an extensive interoperability agreement, and CDP and the Global Reporting Initiative announced a new cooperation agreement. So CDP has already strengthened its alignment with these standards. And just to note, with the regulatory freeze on the US climate rule, it is not yet clear how this will impact CDP's alignment with this regulation. Moving on to water and forests, CDP does not yet publicly score these modules, but as part of its efforts to increase transparency and accountability, these areas could be publicly scored in the coming years. And finally, we believe CDP will move towards increasing the integration of social and governance metrics in the questionnaire. In 2024, CDP strengthened its reporting requirements on governance metrics, as it believes robust social and governance structures are critical to improving sustainability performance. So looking ahead, future CDP questionnaires may dive into areas like equity, diversity, and inclusion, and request more information on governance structures to examine how these elements influence a company's environmental performance. So next, we're going to look at top tips for improving your CDP score. We understand that CDP is not the easiest process, so we've pulled together our top 6 tips that we found most useful when completing CDP. And for further advice, please check out our CDP guidance document that will be circulated to attendees following this webinar and is also available on our website. So the first tip is to analyze and understand the gaps between your current activities and CDP requirements. Assessing your current practices against CDP requirements allows you to identify gaps in your current processes and where your climate and mitigation strategies may need to be enhanced. And this is a really good year to do this because, as Kristen mentioned, CDP has confirmed there are going to be minimal changes to the 2025 questionnaire. So you can use the 2024 questionnaire as a reference point and you're able to start this process early. Additionally, ahead of the 2025 disclosure cycle, companies should develop an action plan to target material gaps such as limited data. The second tip is to engage with stakeholders. Consult with the relevant internal stakeholders and departments to gather key data and insights and identify improvement opportunities. In addition, engage with external stakeholders such as external consultants or investors if you require support with the CDP response process or need to understand investor expectations. Third, it's vital to familiarize yourself with the methodology and scoring criteria for each question. The CDP methodology can seem daunting at first, but its detailed guidance provides really useful insights into how you can maximize your score and to avoid losing easy points. In addition, understanding separate guidance documents such as the essential criteria and how management and leadership levels are weighted for different sections is particularly useful. Fourth, and this may seem like an obvious tip, but answer all questions. CDP awards points for disclosing. Therefore, even if your company doesn't have the response CDP is looking for, you can still be awarded disclosure points for answering the question. And this links nicely with the next tip. Don't be afraid to say no. Companies often believe that responding yes to CDP questions, such as having certain assessment procedures or policies in place, is the best approach and will award them with the most points. However, this often opens up new question pathways which require detailed responses. So if a company that doesn't have the level of detail or maturity for these questions, they can fall short on the scoring criteria and it can actually be more detrimental to their overall score. So companies just shouldn't be afraid to say no and to state why a topic or issue isn't a priority or is immaterial to them. And finally, our key tip is to utilize CDP as a strategic tool. CDP is more than just a tick box exercise. The questionnaire demonstrates to businesses what ambitious and leading sustainability action is and signposts emerging sustainability expectations and incoming regulations. Businesses should utilize CDP as a strategic tool to stay on top of these evolving regulations and establish sustainability as a core part of their business. This better prepares companies for emerging challenges and provides useful insights into the opportunities that are available to organizations to improve their sustainability performance.
Great, thanks, Katie. So now I just wanted to sort of briefly go over how Acclaro Advisory can help. As Chris mentioned, we're a CDP Silver accredited solutions provider, and we're well versed in how supporting companies navigate the complexities of CDP reporting. So I just wanted to go over our 4 levels of service that we have. So our CDP readiness check is an entry-level service designed to help you assess your preparedness for CDP reporting. It provides a clear understanding of CDP requirements, your current activities, and offers you a strategic roadmap to guide your journey to CDP disclosure. And this level is best suited for companies who are new to CDP disclosure or are considering aligning with CDP standards and are looking to take a more proactive approach to sustainability. Our scoring insights level is designed to help your company understand the scoring process and methodology, as we know that this can be really time-consuming and complicated. And this is really designed to help your company achieve better scores. So we do this through mock scoring and expert recommendations to provide you a clear roadmap of your CDP score while offering insights into how the questionnaire evolves year to year. And this service would be recommended for companies who have the internal resource to construct their CDP response, but are seeking a deeper understanding of the scoring process, or perhaps for businesses that are looking for expert advice to fine-tune their response and achieve scoring improvements. Next, we have our enhanced reporting package, and this is an end-to-end support for the CDP disclosure process. So we do everything from data gathering and mock scoring to stakeholder workshops and final reporting, and we really manage the whole process for you. And this process helps streamline your resources while ensuring a high-quality, effective CDP response. So this service is really for companies who need comprehensive support in disclosure and are lacking the internal resource or expertise to gather data and prepare their CDP response. Also for companies that are new to reporting or are looking to significantly improve their scores. And finally, we have the CDP optimization package. This is essentially the enhanced reporting package, but with additional services that can increase your score, such as help with scenario analysis, help with double materiality assessments, integrating sustainable practices into your business, SBTi target setting, etc. Anything that your business is really looking to improve on within the company to help them achieve better scores in CDP reporting. So essentially, that's it for now, but please feel free to get in touch if you have any questions about any of our packages or any of the information discussed today. We also have recently released a CDP guidance document that goes through all of this information in much more detail and provides even more advice for companies who are looking to improve their CDP score.
Brilliant. Thank you very much, Kristen and Katie. So we've got some questions that have come through, and it'd be good to get your feedback on these actually. So, I mean, first of all, we're going to start off with a nice easy one. So, can you give us a bit of just an overview of the timelines for CDP reporting? Because I think last year there were some chops and changes, I think, because they had a new approach, didn't they?
Yeah, CDP timelines are something that change year to year, so you never quite know where you stand. You probably remember quite well, Chris, from your time there. Even in the company, we didn't know what the timelines would be. But this year they have announced that the portal will open the week of the 19th of May. And the scoring deadline is the week of the 15th of September. So that gives everyone the summer to work on their CDP response.
Yeah, it's a joyful summer, isn't it? And yeah, and then and also so we've had a movement obviously now into the integration of different subjects within the traditional climate change one. Could you talk us through like a little bit of background into what it used to be, and then also where it is now, and do companies have to take part in the forest and the water questionnaire, as well as the plastics and the biodiversity questionnaire?
Yeah, I'll answer briefly, and Katie, maybe if you have anything additional to add. So CDP has an activity classification system which categorizes organizations based on their activities. And then this then feeds into the industry impact classification, which determines which data points on water and forests or deforestation are relevant for that company. So this system really ensures that businesses only report on relevant environmental issues. And there's full details of this on CDP's website, so you can determine what what questions will be relevant to your company. There's also additional questions for certain sectors within CDP. So, for example, financial services will have additional questions for their specific industry.
Yeah, and just to add to that, with the integration of the questionnaire, water, forests, and climate change are still scored separately, so they're not integrated into one score. I'm sure everyone's aware of that, but just to raise that point.
Brilliant. Okay, now we're going to start delving into the reads a little bit. So can you give, by the way, Katie, those tips that you gave are particularly, I think they're pretty useful. I think especially the stakeholder engagement one in particular, because I don't know about you, but I can often see the difference between a response that has been made in isolation within like a sustainability team, and then one which has been integrated across an organization. You can see that there's lots of different information, and this, I think this particularly relates to this question here, which is about assigning financial values. So the question is, are there any tips you can give for assigning financial values to climate risks and opportunities enterprise? In particular, not being afraid to say no. Should we simply say we have not identified risks and opportunities instead of giving a zero value? So there's a little bit to unpack in there. Who wants to jump in?
I think you might be best to answer that one.
Right. Well, I mean, I can give it a go. So, yeah, I think so. First of all, so basically, the structure of the questionnaire is it asks, what are your risks and opportunities, and then it starts to then you have to then provide the detail, and then you have to start saying, okay, what is the impact of this to us, and you have to give either a range of financial impact or kind of specific answers. So in particular, so the mathematics can be worked out in terms of how much information you have versus of taking the no route to taking the yes route. So the actual it kind of depends on how much information you are able to give. But I think the key to this question is to look at quality of one particular risk and start to look at it, really kind of start to identify ballpark figures. You're not going to get the financial figure perfect. I don't think there are many companies who get this, but what a lot of companies try and do is provide a number of risks and then try and assign financial information around that. But really what companies should be shifting towards is starting to look at what are the material risks and the material opportunities to the organization, and concentrate on those ones, because that's where sustainability reporting is heading towards when you consider the CSRD as well as ISSB related. So really try and stick to those core ones, because this goes back to what I was saying about stakeholder engagement. Often you can see when a company hasn't engaged with its business and its business leaders because they focus on really small risks to the organization, and then they start to put financial values of, 50,000, this will cost the company £50,000. If if it plays off, and that's obviously not a material risk to an organization of a huge hundreds of millions of revenue. So starting to see what those material risks is the key one. But yeah, we can't give an exact answer to you, but thank you very much for the question on that.
I think also on that, Chris, you have to sort of keep in mind what CDP is asking. Having, perfect figures for the financial implications is not essentially what they're asking a company to do. They want to understand the processes that you have to analyze your risks and opportunities. So we see the same thing with CSRD, for example, with the double materiality assessment. While they do have relatively prescriptive structure on what they want out of a double materiality assessment, it's all a lot of it is essentially understanding that you need to go through a process. You need to be assessing your risks. You need to be assessing your opportunities. You need to be going through a rigorous value chain engagement. I think the key is to have the processes in place and be moving in the trend towards understanding your risks and opportunities. While some of this will evolve as the company becomes more advanced, some companies have the technological capabilities to perform really complex understandings and modeling of what the financial impacts will be. Other companies may not have those capabilities or the resources available, but it's important that you have at least some sort of process and structure to how you analyze the risks and opportunities.
Nice. Thank you, Kristen. So then we're going to filter now into a question which I think is on most people's minds of, what does it take for me to be an A-rated company?
Sure, I can start, and Katie, feel free to hop in if there's anything else. So in order for a company to achieve an A-list status, they have to have certain things included in their response, as well as pass several checks carried out by CDP after the submission of their response. And in 2024, so this past year, CDP introduced new A-list checks for each environmental issue. And those details of the full A-list criteria are on the CDP website under the scoring methodology. And we know that these different levels of scoring can be quite complicated. The changes last year added many different metrics for different questions and essentially applied critical criteria. So this is something that, we're working with companies to better understand, and it's not easy to get an A-list score. I'll put it that way.
Sure.
Adding to that, I would just say read the methodology carefully for each question, because the requirements change for each one, and they provide a really nice outline of which each score requires to reach the leadership level. So yeah, that would be my extra tip.
It can be, you can get quite confusing as well though, because some questions interlink with other questions now. So each year brings a little bit of extra complexity to understanding how that methodology works.
Yeah.
Brilliant. Okay, someone's also had a bit of trouble. Well, they haven't received their score for 2024 yet. Does do we know what's happening with the scores at the moment within CDP?
Well, when I last spoke to our contact there a couple of weeks ago, she said that companies were being contacted individually. She said that every company should have been contacted by now, to the email of the email that was created the submission. So it's possible that maybe that
is that both the investor as well as the supply chain questionnaire, or
I'm not sure the specifics of that, but I would say definitely get in touch with CDP, because the scores should have been provided to companies. They haven't publicly released the scores yet this year. That should be coming in the next few weeks, but each company should have received their scores by now, unless there's some sort of complexity. But yeah, it's possible that maybe the SME and supply chain, because they do, I mean, from my memory, they do sometimes stagger the scoring for different questionnaires. So it could be
they're
possible.
kind of run by different teams, aren't they?
Yeah,
the different questionnaires. So it might be something to do with that. Brilliant. Well, that's all the questions we've got. So I think we're happy to wrap up now. I would encourage everyone, please do visit our ESG reporting regulations webpage, and that filters through directly into the CDP page as well. But as Kristen mentioned, we've got the CDP guidance. Katie spent a lot of time and effort building that up, and it's a great piece of work, and it looks pretty fabulous too. And there's a lot of great information, and also you can check out blogs as well as the frameworks and standards updates, which happen on a monthly basis as well on the ESG reporting and regulations webpage. So please do have a rummage around, and hopefully there's some valuable information there. But thank you very much, Kristen. And thank you very much, Katie. We look forward to speaking and meeting you all soon. Thank you.
Thank you. Bye.